Everyone, this is The Street Live. I'm Jeff Marks, standing on the floor of the New York Stock Exchange with Jim Cramer. Jim, interesting day in the markets. It's the last day of the second quarter.
But there's really good work done by Larry Williams, who's my absolute favorite chartist all my life, that says that tomorrow is the beginning of a seasonally strong period. So I think, just like you had one where you had to sell, he told you had to sell, and you really had to anticipate his call because he's so powerful, buy today. Buy today and hold on for 8 to 12 days, okay? It's been one of the single best trades in the last 25 years. So use the weakness to buy.
So it's a shopping list day, and we'll talk more about what's on our shopping list
put.
when we do our Action Alerts Plus video right after this. But before we get into that, I want to talk about the ADP number because it's Jobs Friday, so there's always going to be a lot of focus on ADP. Stronger than expected result, although there were some revisions, downward revisions for the last 2 months. So what are you thinking about the state of employment in the country ahead of Jobs Friday?
I'm going straight to the source, and I think the source is really, remember, no big business started as big business, started small business. That's why I always go to Marty Musi with 700,000 businesses. And he is telling me formation's incredible, hiring's amazing. He believes, by the way, that he has data which shows that when a state, when the benefits drop, more jobs are created. So I say, pay attention to paychecks, not ADP, and I like it.
Now, you mentioned small businesses, and when I think small business, the first company really I think of also is Shopify, and you had president of Shopify, Harley Finkelstein, on a great interview.
2 million customers.
And what he talked about is how it's entrepreneurship driving the recovery. Yes. It's small businesses bringing local communities back to pre-pandemic levels. Now, Shopify also announced a key move yesterday. Now, they're cutting commissions off their app store, the Shopify app store, for companies' first million revenues. So. What do you think about Shopify? How big is this to the small business story?
Oh, my God. I mean, one of the things that we've always been worried about, and this is Apple App Store issue, is to get started, you got to really you can't give someone a commission. This is the problem, say, with DoorDash. By the way, I'm doing no business with DoorDash at Bar San Miguel. No one. I mean, I want to do business because I got a kitchen.
People are coming out.
People are going out. They just are going out. And DoorDash has a lot of different verticals, so I don't want to go against DoorDash. But, when I'm seeing what's going on, when you step back to the economy, people are going out furiously. It's a roaring 20s environment. I have a piece in Real Money today about RH, Old Restoration Hardware. I'm no longer calling it Old Restoration Hardware, and the roaring 20s. There are things that are going on that are very, very exciting, and it's one of the reasons why I still want people to buy stocks. But we should talk in our Action Alerts video because we're making changes, and the changes are important.
Yes, absolutely. And we're going to hit on RH later on this program, too. Yeah. But before we do that, we talk about roaring 20s, when I think that people are going to go out, have a good time. And when they see that in the stock market, too, a lot of the times they want to chase those momentum names, right? That's going to be where the fast money is. But, I mean, you talked about last night on your show, you talked about how investing in individual companies, if you're willing to put in the homework, you can outperform the indexes. Now, but when it comes to momentum, there is an element between is this gambling or investing? I want to get your thoughts on what's the difference between gambling and investing when it comes to the stock market.
Let's use Shopify. If you're buying Shopify because the stock's been going higher, but you don't really know what Shopify does, you're gambling. If you're buying Shopify because you know of or are part of a small business that is benefiting from it, then you know what Shopify does, and you know that there's 2 million businesses that are benefiting from Shopify, and because they do the back end. If you're buying Etsy, another stock, pure momentum, and you don't understand what they do, you're buying because the chart is great, which it is. No, you have to buy Etsy because you understand that they too are empowering small business. These are empowering small business, which I think is this. I'm going to write this up. The single most powerful trend right now in business today is empowering small business. And you know that, by the way, Facebook has done much more than people realize by empowering small business. Now, Facebook's still a little toxic, right? Because it's so powerful. But the small, medium-sized businesses are just on fire, paychecks too, because business formation post-pandemic has been extraordinary. So I think you're gambling if you don't know what Shopify does, and you're not if you do. Let's take Zoom. Charlie Munger last night talked about Zoom. Okay, he said it's the greatest and it's not going away. Well, I mean, my stepson works for Zoom, and we can't talk about what he's doing, but I can tell you that the number of people they're hiring would be indicative of the fact that they're not going to just be Zoom. You want to find companies that are right now thinking about becoming bigger companies. Shopify with this new initiative, Etsy buying the Mercado Libre of Brazil, which has been Mercado Libre has been an amazing stock. Look for companies.
Great deals recently.
Oh my God, I know. And I look at it, I say, why didn't we buy it? I mean, there's a lot of stocks. RH, I'm going to talk to you about that. Maybe we have to start thinking about buying. I don't like what you first said about chasing momentum is in my head. I want these stocks to come down. And a lot of you have your 401k, and I feel bad for you because you want the market to come down to get in. But then you had that little decline 2 weeks ago, and that was your chance.
So is it kind of like you're walking up to a roulette table? Just go back to the gambling analogy. You walk up to a roulette table, you see it's been black four times in a row. So what are you thinking? Well, it's probably going to be black again. Yeah, and that's kind of what the momentum investing is.
4 times ahead, and the next one's going to be it. When you go to the blackjack table, now blackjack has rules, okay? And you win 50.5% of the time, and the dealer loses. It's the only one where the house loses, okay? If you play by the rules.
By the book. Yeah.
Right. So there is a book. That's what we do with Action Alerts. It's the book, okay? And I don't understand why people would ever not have the book sharp on blackjack. I mean, you got to know the book. And that's what we're doing. We're explaining what to do that you don't hit on 18 when the dealer has a 6. That's what Action Alerts is about. If you want to use gambling, if you want to talk about Andy Beyer and picking winners, where he says, listen, you got to go to a racetrack and maybe only bet once, and you're looking for what the record has been before with this kind of track. That is what we do with A+. It is making it so that it's not that if you are gambling, at least you're good at it, but more important that it shows you it's a game of skill, not a game of chance. Stock skill.
I have a friend who, whenever he has 2 8s, he refuses to split. I never understood it. You always split 8s, but this is a stock show, not a gambling show. That could be a good point. You have to check the book on that.
You can't do that. No, it doesn't work. Splitting 8s with a dealer with a face card is a loser.
But let's go back to stocks. Big IPO today. Didi price. This is going to be
doing. Where's it going to open at?
Has it opened yet? I haven't.
One day what we're going to have to do is we're going to roam the floor to the. This must be Didi right here.
We'll do a walking show.
Yeah, we have to ask them how Didi's. There's a couple deals.
Just to get back on Didi, it's the largest Chinese IPO since Alibaba. So you talked about how you're willing to bless if you want to speculate on a Chinese IPO.
The biggest ones. Ben Stoto did this tremendous analysis. Works me at CBC. The biggest deals have been successful. The Chinese allow you to make money on the biggest deals. The smaller ones have been unsuccessful. So this is a bigger one. It should
bigger
work.
One's more vetted. Now this is the Uber of China. So this is a pretty big company.
I just think, look, if this opens at 1350, if it opens down, I like that. Now there's a lot of people who only want ones that are flying. By the way, there's this great misinterpretation about something I said about Coinbase in Twitter. The stock was looking 500, and I didn't want it to open at 500. It said don't pay more than 467 or something. Well, that was what I do is try to give you. I did the same thing with another one that's misinterpreted on Twitter with Lyft. They're opening prices that we get to hear about that people don't, okay? Because I'm friends with people on the floor. And what I'm trying to say is that price is bad. Don't pay over that price. But there are a lot of people on Twitter who either hate me or are unsophisticated. And that's why my mentions column is such a Hiroshima and Nagasaki. But you have to understand that what I'm saying is don't pay above X, because I'm hearing on the floor that it might open at X, but these people don't understand the information I have versus the lack of information they have.
Now, what also plays a factor in don't buy by X? Is that like comps multiples too? You're looking at the peer group.
But also I know that there's too much retail enthusiasm. Stocks moving up too much. Retail can overwhelm a stock. And all of this is predicated, by the way, on TheStreet.com. When we came public, and we came public 22 years ago, the stock was looking, the thing was priced at 19, and it was looking 60 to 65. And I was begging people not to pay north of that. That would be foolish, but I was really trying to get the deal down. I wanted people to not buy it. It never traded $1 higher than where it opened.
I think you get into this in Confessions of a Street Addict, a little bit of the pricing and how it worked out.
And it just destroyed my credibility, and I hated it, and I lost control of the deal. That Night Trading had kidnapped the control from Goldman Sachs, and I was screaming at Joey D, come on, you got to find stock. And I knew that I would be hated for it, and I was. I mean, I spent I've had a lot of time on the cross. You know, Jon Stewart, time on the cross, the Coinbase. You know, this interview that Aaron Tass did with me, where I said later on, look, I didn't do these things. I'm just telling you. That's my time on the cross. And you know what? You can continue. You can put my time on the cross all you want. And you're always allowed to review my Buckner, you know, through my legs. I've made mistakes. I've been around for a long time. You make a lot of mistakes.
Yeah.
You know, I'm not Ted Williams.
But we focus on our mistakes just as much, and we scrutinize, and we always try and find a learning lesson from what it comes. And I think that's what is really just the key part of investing and becoming a better investor.
Right. We just want to help you make the odds better. Okay. I do a lot of analysis that's based on sports because I was a sports writer, and I know very well that there are some things that you look. 4th and 1. We've changed the view about what to do at 4th and 1. So I feel we can change the view about what to do with Shopify. You have to understand the cross disciplines, which do matter, and you have to be able to eliminate things that have produced mistakes, even though they may not make mistakes that one time. That's the coin flip. Yes, you know, came up heads.
All right, let's get back to earnings. A couple big reports out this morning. First one I want to hit on, Constellation Brands. Better than expected quarter, especially when you back out.
Damn it, I wanted to buy that one.
You were talking about on Mad Money.
Well,
I remember the video.
There's a bunch of clowns who've been speculating it's going to miss the quarter. And the reason why they said that was because there is a glass shortage in Mexico, in part because of COVID. Obviously, Pacifico needs glass. Corona needs glass. Pacifico up more than 30%. I've been saying to people, you got to be in that one. But what's happened is that they blew the numbers away, ex Canopy.
Yes.
And you don't
raised
sell
forecast.
Yes, you do not short or sell Constellation going into the summer.
Plus, you get an accelerated buyback. So
no one knew that.
So that's something too that they're going to be right in there buying stock as well.
They've been saying that they generate so much cash
flow. Yep.
that you shouldn't worry that they had put money in Canopy. And nobody believed them. No one believed Bill Newlands. We happened to have it at a street conference where he laid it all out. And he's done even better than he said.
All right, let's turn to Bed Bath & Beyond.
Yeah, Mark Tritton, how about that?
Very strong sales. Earnings a little bit lighter than expected, but it's the turnaround
okay,
cost.
So there was 30% short.
You got to give them forgiveness
Oh, my God, yes. 30% short dropped to 20% ahead of the quarter. That was smart. I was begging the shorts to cover, all right, because it could be like a GameStop. They keep referencing bye, baby. Why? Over and over again. There's something going on with that business that we don't know about that makes me say, stay long, Bed Bath & Beyond. By the way, there was a negative note about Best Buy, saying that maybe the numbers are peaked. That is wrong.
Yeah, so I noticed right before we did this video, Bed Bath was up about 26% today.
It had to be.
So if you're shorted, are you worried right now?
Oh, you should be. Now, John Duskin, old friend of mine, led the insurrection against the previous management, and got Mark Tritton from
He's also doing work on Kohl's as well,
right? He's the best, John. And I had dinner with John and my wife at Bar San Miguel, and Lisa was like, John was giving me the whole thing about how they have all these SKUs and they're going to cut them down and stuff, and Lisa comes and says, "You're just going to fire everyone." And Lisa is my friend John Duskin. She says, "Yeah, I don't care. You're going to fire everyone." Well, what John hasn't done is fire everyone. What he did was bring in a merchant who changed the top people. The people who work there at the stores, they don't know. They've just been directed badly.
Mark Twain, he did great work at Target, right?
He was so good at Target. And what he's done is invent his own brands. And like Kirkland at Costco, his own brands are loved.
Yeah, and meanwhile, Kirkland at Costco, Walmart today, that's an actionable sling.
Out of nowhere. I mean, I've been waiting for that bow wow to move, and suddenly when it has one of those moves based on nothing, look out, then it's going to be based on something. Because what happens is the analysts then gin up a reason. They don't want to be out there because the stock's up 4. They're going to come back and say, you know what, this insulin deal is the first of many deals. That was lowered the price of insulin. There's been a big price war insulin. Diabetes, terrible disease. Let's see which ones they do next. There's so many drugs that they could conceivably give away in order to keep business.
All right, sticking with retail, we talked about this at the beginning of the show. Restoration Hardware, RH. You said on your blog on Real Money this morning that this was the best earnings report of the second quarter, last day of the second quarter today.
People were looking for basically a fraction of what they reported, and left out because I can't go on too long. Is that he and the company bought a huge amount of stock in the hundreds, into 600.
Gary Friedman.
Gary Friedman. And Gary Friedman went on Mad Money, looked at the camera and said, it was stocks at 125. I am going to buy 1 million shares after this is over. And it was like, well, it went to 600. It's a good call.
And those showrooms are just absolutely magnificent.
Oh my God. Have you been to the restaurant at the top?
It's one of my favorite places. I've been there once, but I'm dying to get back.
It's an Insta heaven. Insta. My daughter Insta'd it everywhere. She's got a very good Insta.
All right, so be on the lookout for that.
Fantastic.
All right, so with that, let's wrap up the show. Last day of the second quarter.
Congratulations, everyone, because I hope you had some of our stocks, including, by the way, AMD.
Yeah, we're gonna hit on AMD big time on our video right after this. But that's the show for today. I'm Jeff Marks. We'll see you tomorrow.